I'm the Tax Geek, and this is your taxes oversimplified. Today, we'll explore the effect that COVID-19 has on your taxes. It seems like just about every YouTube channel out there has done at least one video relating their channel's topic to the current COVID-19 crisis, so it's only natural that the Tax Geek joins in. On March 27, 2020, the President signed into law the Coronavirus Aid, Relief, and Economic Security Act, known to most as the CARES Act. The CARES Act created a number of temporary tax breaks for individuals and small businesses. Quite a few of the provisions of the CARES Act affect taxpayers in 2020, and I'll take a look at those provisions that have the biggest impact on most taxpayers' situations. On December 27, 2020, the President signed into law the Consolidated Appropriations Act, which extends several provisions of the CARES Act and provides additional stimulus payments and unemployment benefits. So let's answer some questions. First of all, are the stimulus payments you received in 2020 or 2021 taxable? No. The stimulus, or economic recovery payment, that most people in the United States received is the advance payment of a refundable tax credit on your 2020 taxes. Since it is considered a tax credit, it is not taxable. Next, if you either didn't receive a stimulus payment and you think you should have, or didn't receive a stimulus payment for your children under 17 and you should have, what do? All during 2020, there are various mechanisms for obtaining a stimulus payment if you didn't receive one. These mechanisms were shut down late in 2020, but will most likely be revived in early 2021 for the second round of stimulus payments. Another thing you can do if you didn't receive a stimulus payment for yourself or your child is file a 2020 tax return where you can claim the stimulus as a refundable tax credit. If you had no taxable income for 2020, you can file a simplified return listing any dependents under 17 and reporting $1 in interest income. You can also claim a stimulus payment for any child that was born after you received your stimulus payments. This applies to both the first and second stimulus payments. Most people's stimulus payments were based on their adjusted gross income as reported on either a filed 2018 or 2019 tax return. Many people didn't receive a stimulus payment because their adjusted gross incomes were too high to qualify for one. If you find yourself in this situation but your income for 2020 has decreased to a level where you would qualify for a payment, you can also claim the stimulus as a tax credit. Okay, so what if you find yourself in the opposite situation? What if you received a stimulus payment based on your income for 2018 or 2019 and your income in 2020 was high enough so that you wouldn't have qualified for a payment? Do you need to pay it back? No. As long as your income was within the guidelines for 2018, 2019, or 2020, you are qualified to receive either stimulus payment. What if you had to make an early withdrawal from a retirement plan for expenses or financial hardship related to COVID-19? Is there any special treatment for these withdrawals? Yes, 4 special treatments in fact. Remember, in all cases of withdrawals from a traditional IRA or 401k, the proceeds are taxable. That doesn't change. However, early withdrawals due to COVID-related hardships are not subject to the usual 10% penalty on such withdrawals. This exception is claimed using Form 8915E. These withdrawals must have occurred before December 31st, 2020. This was not extended by the Consolidated Appropriations Act. Early retirement withdrawals are usually subject to automatic 20% federal tax withholding. This can be waived for COVID-related distributions, though it's probably not a good idea to do that. The tax on early withdrawals can be spread over 3 years, so if you withdrew $30,000 for a 2020 COVID hardship, you would pay tax on $10,000 for 2020, $10,000 for 2021, and $10,000 for 2022. You can also elect to pay the tax all at once if you prefer. Finally, you may redeposit these withdrawals into any retirement account that accepts rollovers, as long as you do so by December 31st, 2022. You would claim a refund for any taxes paid by filing Form 1040-X and amending your tax return. Another provision of the CARES Act is the temporary suspension for 2020 of required minimum distributions from retirement accounts for those who are required to take them. Additional help for low and moderate income taxpayers comes in the form of an EIC lookback, which allows taxpayers to base their earned income credit on 2019 or 2020 earned income and choose the amount that would give them the better result. The final provision of the CARES Act I discuss in this video pertains to sole proprietorships with no employees. These people may defer about 1/2 of the Social Security portion of their self-employment tax to pay later. 1/2 of this deferred amount must be repaid by December 31st, 2021, and the other half by December 31st, 2022. Here's an example of how that works. Suppose you have $35,000 in self-employment income. To calculate the deferral amount, take the $35,000, figure out how much of that income was earned after March 21st, 2020, multiply that amount by 0.9235, and multiply the result of that by 0.062. You may then defer $1,528 in self-employment tax, 1/2 to be repaid in 2021 and the other half in 2022. Repayments of deferred amounts are paid directly to the Internal Revenue Service. For the self-employed who do have employees, there are several other provisions of the CARES Act that may benefit you, the details of which are beyond the scope of this video. If you find yourself in this situation, you can get information on these benefits by clicking on the links in the description below. And that goes for everyone. For more detailed information, go to www.irs.gov and click on the Coronavirus Relief button on the main screen. Or you can engage a qualified tax professional to guide you through the maze of potential benefits. This is still an evolving situation, and an update video will be produced if the information in this video changes significantly. If you found this video informative, please give it a thumbs up and subscribe to see more content. If you have any questions, comments, or suggestions for future videos, please leave them in the comment space below. Thank you for watching, and stay tuned for more taxes oversimplified.